Hello, Tom LaVecchia here with the New Theory podcast. As you guys know, we're millennial driven, and one of the things I think millennials missed out on is kind of the rise of the Wall Street trader. Don't get me wrong, hedge funds are still knocking around, there's still some opportunities, but millennials for the most part missed the heydays, and frankly, the Wolf of Wall Street was one of those situations that we'll talk to the hubris and the craziness of Wall Street. Today we have Michael Kimelman, author of Confessions of a Wall Street Insider, a cautionary tale of rats, feds, and banksters. Michael, welcome to the show. How are you doing today?
I'm great, Tom. Thanks for having me.
Okay, as we always start off, in full disclosure, I know Mike for a little bit. He's a friend of mine. He's a friend of New Theory, so we're especially happy to have him on. Michael, why don't you go through your formative years, where you grew up, and what made you you?
Sure. I grew up in Los Angeles, came east for school, played a little baseball in college, and then headed back to the West Coast for law school, went to USC, and coming out of USC, I took a job with one of the big New York law firms, Sullivan and Cromwell, and decided to move to New York because that's where the headquarters was and all the action. So you want to be near the action. And I was an M&A associate and a corporate associate for a couple of years. And this was the late 90s, and there were quite a few people around me making, significant multiples of what I was making and doing a lot more interesting work, both in finance and in tech. And as somebody who, didn't have much of a tech or a programming background, but had always been familiar with the stock market and always been a fan. I had actually traded my way through law school and made some good money just on a standard E-Trade type account.
Oh, wow.
I decided to lateral into trading and took a job with a firm or two and did very well there. And over the next decade or so, had a series of jobs as a portfolio manager for different trading firms and hedge funds. And, at the last two or three firms I was at, I was one of the top ranked portfolio managers at that firm and traders and did very well, and decided to eventually start my own hedge fund, which I did in early 2008 called Incremental Capital. We built that in a very brief time span to about $250 million in assets, and had many traders working for us during a particularly turbulent time on Wall Street. It was the financial crisis, as people remember, and stuff was imploding and exploding everywhere. But we were able to navigate that very well and put up some really impressive returns until end of 2009, when the feds kicked down my door and arrested me for insider trading as part of one of the largest insider trading investigations in history. That's the nutshell account.
Okay, so let's do some interstitial questions. So for the first part, you follow the path, right? You're born, I'm assuming, a fairly good upbringing because you seem fairly well adjusted, right? So I'm assuming you grew up, good family, went to law school, lynched on as an associate. Let's talk numbers. So were you on partner track? Did you make it to partner yet? Were you a senior associate? Where were you at the law firm, which is a huge law firm, by the way, or I don't know where they stand now, but I have heard of them. And where did you stand at that point prior to jumping ship to the investing side?
It was a very well-respected law firm, one of the biggest out there, probably one of the top three, along with a couple other firms. I was a mergers and acquisitions associate. I did some real estate work as well. I was very well regarded. Not even close to partner, but I was on the partnership track. Back then, it was about 8 years. And, like everything else today, that's been pushed out or changed or restructured. But when I let them know that I was leaving to trade stocks, there was, obviously some disappointment, and they wanted me to stay. But at the time, again, it was 1999, and, the NASDAQ was jumping about 80% a year, and tech stocks were going wild, and I thought there was just a lot more opportunities in finance, and actually interviewed for a risk arbitrage position at Bear Stearns and a few other firms, and thought it was in general a more intellectually challenging and exciting field to be in.
Okay, so let's talk some logistics. So we're going to talk ranges or whatever you're comfortable with. I'm assuming you were making six figures back then as an associate with the firm, I assume, right?
I was.
Okay. So when you had the opportunity to go into trading, was it a variable income with a much bigger upside, or on the jump you were making substantially more? Walk us through that, because I always want to find the why behind the why.
Sure. It was both. I mean, it wasn't just the money. I mean, obviously, money plays a role in most things people do when it comes to employment or career-wise. It was more that I was going to have greater control of my time and of my future. As a lawyer, obviously, there's a political factor to making partner. Not only that, but once you make partner, it's not like your workload decreases much, and the work demands were high, and I don't mind paying my dues, and I've paid them my entire life in any career I've been in or any aspect. But when you're working 100 hours a week, you don't exactly get a lot of time to enjoy your life or explore other opportunities. And I had always been interested in writing. I had always been a creative entrepreneurial type guy, and had sold or created businesses even before law school. And I had just met my soon-to-be wife, so there were other demands on my time that I felt I couldn't fulfill. Working 100 hours a week and sleeping under my desk. And also, obviously, the money played a big role as well because, I think the starting salary was about 100 or 120,000 back then as an associate. Partners at that firm certainly made many, many multiples of that. But as a trader, the most attractive feature was you eat what you kill. So my eventual compensation was going to be solely up to how well I did, which is even more meritocratic if you think about it than sports. It would be like getting a salary in sports of zero, but then being compensated based on how many home runs you hit or how many doubles or your ERA. So it was really a pure outcome-based performance compensation, which I found attractive.
Okay, and so just like anything else, you pivoted, right? You're probably like, hey, I want to be a partner, and I'm going to make 7 figures in 8 years, and I'm going to have the chauffeur driver and all the accoutrements that go along, with that. With that being said, things change, right? You met your beautiful wife. You decided to get married, have kids, so it changed the dynamic of your needs. So that all makes sense. So then you ventured deeper into the investment game, and you did quite well. How does one start a hedge fund? There's SEC followings and all this other kind of fun stuff. So A, walk us through some logistics of setting up a hedge fund, and B, how did you raise capital at the time?
There's really two different ways to go forward with that. One is pedigree. If you have a pedigree, meaning you come from one of the bigger firms like a Goldman Sachs, and have a decent track record, it's relatively easy to do. It doesn't mean you're going to be successful at it, but if you have that on your resume and you've done well in the past, you'll be able to raise capital typically. The second way is just pure performance. If you have, again, there are people like Eric Mindich who left Goldman Sachs' arbitrage desk and raised, I think it was $3 billion to launch his fund, which he just shuttered this year actually, but that is a huge number to do, at the start. And then there were other people I know who started with $10, $15 million, but just had a tremendous track record, were good portfolio managers and traders, and produced great returns. And those guys, after a certain number of years, got to a similar level. So those are the two main ways to do it. Obviously, you have to have the correct team around you, whether it's accountants, lawyers, or whatnot, because it is a tremendously heavily regulated industry, which I talk about at length in the book. And if you have that team, and if you either have the pedigree or the track record, you can do it. It doesn't mean, again, that you're successful at doing it. And these days, especially for the last 3 or 4 years, many funds charge fees and really have become little more than just asset gathering machines that try to approximately match the market, if not beat it. But a lot of them have failed to do that recently as well, and really are just collecting fees.
Okay, so I want to go through some of the math, and I apologize because all my Apple stuff is interlinked, and any call I get goes on my screen. I don't know if you hear it, but I apologize for that.
No worries.
Yeah, so we keep it very raw here in New Theory, but I think that's part of the attraction. All right, so So I want to run some numbers. So if I'm managing 250 million and I'm doing a 220, I'm just guessing you're doing a 220. And for you home gamers, that would be 2% management fee plus 20% of performance. So right off the bat, you would get $5 million for for managing the fund. And then
Correct.
I'm just gonna assume just for discussion purposes, you would have a 10% return, let's say 1 year, which would burn off 25 million, and you would 5 million there. So if you're collecting, let's say $10 million, how much went to you? Or were you living high in the hog? Did you have 7 cars? Did you have 30 associates? When you collected that 10 million, how much made it to Mike Kimelman? Is it, I want to kind of get a feel for that.
In our case, not much at all. I mean, we had a little bit different of a structure where we also tagged on to with sort of a proprietary trading model in that we would upcharge our traders a fee for their trading volume. So if it cost us a penny per share, we would charge them 10 cents a share. And those aren't the actual numbers, but we would have a tolling transactional commission volume as well that approximated about $1 million a month is where it was on its way, and getting a lot higher as we grew bigger. But out of that, you have to compensate employees, you have to compensate analysts, you have other overhead expenses. And in a lot of ways, we were plowing our capital back into the firm because we were trading it and doing well. So, in a year when the S&P, I think in 2008, was down 37% or something like that, we were positive.
Wow.
And had done very well. So in those types of situations, I was very comfortable with putting our money back into the fund and continuing to trade and grow.
Okay, now we're getting to the good stuff. Okay, so you're making money, things are cooking. You're captain of industry, you have a hedge fund. Now, the alphabet guys burst down your door on that fateful day. I didn't read the book yet, Mike. I apologize. I will get it and I will read it. But they did it for a reason. So let's go through exactly what happened. Obviously, you're a lawyer, so you're not going to get yourself in trouble.
Mm-hmm.
But share as much as you can. What happened? What really happened? I don't know. I hate to say this, but and I love you that. But if I'm going to think they're going to put a lot of resources behind it, some agents, some undercover, 9-month investigation, whatever it is, there's got to be something behind it. So let's cut to it and get to the good stuff.
You sound like the jury pool during voir dire. It was, no one gets arrested by accident. Where there's smoke, there's fire, and all these other comments. When in reality, if you look at, Barry Scheck and the Innocence Project, and those were people committed, accused of murder, which you would think juries, judges, prosecutors would be the most diligent as possible. Still hundreds and hundreds, and those are just the cases they've gotten to, have been exonerated. So,
True.
Certainly not comparing myself to that, but just to give you a little bit of an overview. I had a partner, and I do believe these cases, in a lot of ways, and some of the research and studies and press has borne this out. This was the height of the financial crisis, and there were certainly people that were trading on inside information and doing things they weren't supposed to, but what we had was the administration and Preet Bharara and others who made a very deliberate choice to pursue these types of cases so that they could show, the public who was angry at the financial crisis, and rightfully so, that they were on the case and doing something about it. So, anybody who knows anything about economics or finance knows insider trading had absolutely zero to do with the financial crisis. There were plenty of other issues, whether it was mortgage or failure of regulators or whatnot, or leverage. But insider trading was not one of them. Yet all of the resources were focused on these types of cases. And in my case, there were some people who were certainly guilty. In general, there was a hedge fund manager named Raj Rajaratnam who ran Galleon, which was a $7 billion fund.
Yes.
Incremental, my fund, was deemed a baby Galleon because we had hired so many traders from Galleon and from SAC and from these other fast money funds. And my partner at Incremental had worked directly for Raj Rajaratnam and was Raj's right-hand man during a period of time in 2007 and 8. And it was during this time that Raj got arrested for insider trading. My partner had done some things on his own and with Raj that were considered, fraudulent and committed insider trading. And in my case alone, they arrested 9 other people that were related to it. But out of those 9 people, I would say, maybe 6, maybe 7 certainly deserved to be prosecuted. I wasn't one of them. I were, like anybody else, and like I had done for years and years and years, I had played ideas and I had played calls that I got from him, from numerous other people on our trading desk, and from other contacts in the industry. And you have always, throughout history, needed something called knowledge, and where you should have known or had an idea where the tip came from. In this case, my partner either disguised where it came from, or deliberately, hid where it came from, or just wouldn't reveal where it came from. Because think about it, your network is what makes you valuable. And that's something in finance, that's something in any industry. If somebody's going to reveal where, they're getting information from, or make introductions, a lot of times, they run the risk of being cut out of that loop. So people will often say, you'll hear on the trading desk, my guy, or my SAC guy, or my Merrill guy. But if I were to say to him, all right, I want to meet this guy, I need to talk to him, I need to vet the idea myself, I need to see who he's spoken to, and down the line, that would never happen. It's just sort of a fiction that prosecutors and FBI agents want to believe that somehow each and every idea we traded, we somehow were able to determine the credibility of the sources, how many intermediaries, and there were certain stocks they charged. In my case, they only charged 1 stock. But in some of these other cases, they charged tips that went 4, 5, 6 people away. And we also had, we had a judge who was, a government prosecutor in sheep's clothing, so to speak. He was a former prosecutor. That's Judge Sullivan. He had been overruled numerous times in other insider trading cases. Unfortunately, they came after my case. And, for the same exact set of facts, same exact incorrect jury instructions. But in the end, it was, 2009, 10, and 11. It was the height of Occupy Wall Street. I believe they could have charged anything and a jury would have convicted because, again, hedge fund, Wall Street guys, not the most popular people in the world. So,
all right.
Yep.
All right. So I want to give you that the climate was against you. I remember those days. It's thawing out a little bit. Especially since Trump is in office, not to get political, but since Trump is in office. However, though, I want to kind of bucket this, and then obviously you have the official charge and official conviction, better than anybody. But what was it closer to? Which bucket would you say? Was it the bucket of, and let me finish and then you can answer. Is it, hey, one, I knew what I was doing. I felt it was legal. I may have been a little cavalier. Or was it, you knew what you were doing, maybe you kind of colored out the lines a little bit, and you took a risk assessment, meaning, hey, I may be doing 99 things right, one thing is gray area, and I'm going to do a risk assessment. C, kind of plausible deniability, I was working with Joe, and Joe kind of fucked me, or was it D, were you fully operating outside, the law, but it was kind of the norm back then, so you didn't think anything of it. So, or E, whatever it was. So where were you closest to, and then what were you charged with, and what did you end up getting convicted for?
So they charged me with insider trading and conspiracy to commit insider trading. And the insider trade they charged was a stock called 3Com.
Okay.
And to go back to your spectrum, I believe it was closer to A.
Okay.
There's always a gray area.
Okay.
In this case, again, I had played probably 360 ideas from this guy alone, of which, one they charged me with in this trade. And I don't believe I did anything wrong. I traded a stock, and I'll tell you the details were, I got a call on August 8th from my partner, and he basically said something to the effect of hearing, a lot of noise on this 3Com. A couple smart money guys are buying it for size. I'm going to buy it for size. I like this one a lot. And I went out and bought the stock, and it was about 2 months later. And again, this stock, 3Com, about a week before, the Wall Street Journal had an article saying 3Com was in takeover talks. And the Wall Street Journal named the actual acquirer. They named Bain Capital, that Goldman was the banker, and the eventual price. Okay. So that's very public. All the information was out there on that front. And then about 2 months later, the stock did get taken over. And I had traded it. I had, sold it, bought it, sold it, and I made some money on that. in this case, they did not record that call. They recorded 2 years approximately of wiretaps. They had 7 informants with body wires, thousands of instant messages, emails, and everything else. And they yet could not point to a single witness that could come up and actually say that I traded on inside information. In fact, the only defense witness we called was the lead FBI case agent. And we asked her, can you point to one single illicit trade or comment where, Mike Kimelman gets passed inside information and he trades on it? One email, one body wire, wiretap, and reluctantly she said no. And between that and we also there was an FBI informant sitting next to me on the trading desk, literally 2 to 3 feet away for about 18 months, wired up every day, who was trying to incriminate myself and other people at the firm. And they didn't even bother to call him at trial. So those 2 facts, I think, outweigh almost anything else about the case. And if, you had a juror who really understood stocks and trading and, what's illegal and what's not illegal, I think most people, especially now, if they were familiar with the facts, would say that's kind of a ridiculous case. But, I did have a partner who was blatantly breaking the law, who sounded like a cross between, John Gotti and Bernie Madoff on the phone.
Yeah.
And there were a lot of calls with him, and those calls sounded bad. So I think this was a case of guilt by association where they sat us next to each other at trial, and his brother was there as well, and just said partner, friend, partner, friend, partner, friend. And I think that would have been enough to convict and was enough to convict.
Okay. All right. So you kind of clarified a little bit, and it makes sense, right? So you basically had the government after you. Okay. So a few different parts. There were 7 informants, 7 rats. Let's call it what it is, right?
Mm-hmm.
I like you, Mike. So I never had an issue with you. I always kind of liked you. But sometimes the motivation might be, hey, they don't want jail time themselves. They may not like you. Let's wear the hat of the 7 people, not ourselves. Was it hubris? Why were 7 people flipping on you or your partner? Let's first talk about that.
So out of the 7, 6 either never met me or got up there and said they didn't think I was involved in any way, including one who was the main sort of, informant for the case. The one informant who in some way implicated me was a gentleman who his testimony was that he thinks we were at a bar together at happy hour and that I overheard a conversation between that informant and my partner. There were so many parts about that story which didn't make sense, including on cross, we said, are you sure he was there? And he said, no, but maybe he called me or I called him. And, our phone records show we never spoke. So there really was not a single informant against me that made any type of case.
Okay.
So, and with regard to the other cases, yeah, I mean, it's a sad thing. And, it happens now even in mob cases and everywhere else is the punishments are so great. And certainly white collar guys, these guys, some of them would, turn in a heartbeat no matter what gets said. But there was at least one other guy in my case who I don't believe broke the law. But if the feds show up and say you're going to do 10 years in prison unless you can give us something on, Mike or Z or whoever else, a lot of people, for better or worse, will say something, and some of those people will make it up. And I had another guy in my case who I saw in a halfway house who I never met but was a part of the case, and he told me, feds came to him multiple times and told him, you better get creative if you want a deal, or put something on Mike or figure something out to say about Mike, or else, no deal. And he was like, I can't say anything. I've never even met the guy. I don't know who he is. So, he at least had the integrity not to manufacture a story. But there are people, and don't get me wrong, there were people, informants in this case, who did something wrong and, owned up to it. But in a certain way, you can own up to it by pleading guilty as well and just saying, yeah, I was a part of this and I did it. I'm going to take my punishment versus trying to, bury somebody else that was in the case with you, especially if you're sort of manufacturing facts or getting creative, so to speak. That part I have an issue with.
All right. So it brings us to the trial. Okay. So you get charged. They have their case. Now, I'm just, hopefully people listening are not in this situation, but we want people to understand that, frankly, you get fucked. Whether you did something or not, it's really about the narrative and how it's spun. So my question is, I'm just thinking as a business person, right? So you're Mike Kimelman. You made a few bucks. You got some resources, but I'm assuming at that point your phone was shuttered. I assume, correct? Everybody redeemed.
Yes.
Okay. So and plus you probably had your own money tied in there. So you probably had a few bucks. And I'm just guessing now. You probably had a few bucks, but we're tied up. So when you're going to face Johnny Law, your lawyers are charging a lot more than mine at $300 an hour. So I'm guessing a defense like this was probably at the minimum low six figures in the seven figures. So was your strategy is like, hey, fuck this, it's about being right. I'll spend every last cent. Or was it, a calculated decision where if you got off, you could still trade to protect your income? Give us your decision point and strategy by taking on the government, because that's fucking balls. But just give us the strategy behind it.
So you handicapped the question perfectly, and pretty insightful analysis. And it's a tough call. I mean, I am a guy who always prided myself on being able to analyze a situation or handicap a situation and come up with, either the best answer or the least worst option. And in this case, I completely didn't even come close. After I was indicted, and we made a case to get the government to drop the case because I didn't think, and my lawyers didn't think that, I was appropriately arrested or had done anything wrong. The response was, and again, they had already pot committed, so to speak, by marching us on CNBC and parading us around and everything else. The response was, look, we've done a little more work. We think your guy is a peripheral guy at best. It's maybe questionable whether he should have been arrested, but at this point, we're prepared to proceed. But we realize he's different than anybody else in this case, so we're willing to give him probation. Let him plead guilty to one count of conspiracy, and he'll do no jail time. We'll give him probation.
Wow.
And I think, in that case, that was a very tough deal to turn down. And it was something that obviously tortured me. It's not like Law and Order where we go beginning to start, case is done in 40 minutes. I mean, I was on, pre-trial for 2 years. And when you're on pre-trial and, you've been on the Wall Street Journal and the CNBC, it's not like you're working somewhere in finance.
Correct.
Like you said, I had funds frozen. I had, legal fees and everything else. But the rational, least worst option should have been to take that deal and say, you know what, I don't think I did anything wrong. But in light of what's ahead of me and what I could be facing, I'm going to take that probation and start over and do something else with my life.
Well, Mike, hold on. Yeah, but Mike, you're not an idiot. Let's tell the listeners what happens when you say that's like if you say yes, what does that mean? I'm assuming you're precluded from ever trading again. So it's not a layup. So you say yes to that deal. What does that mean?
If I had taken that probation deal, I would have been disbarred because I'm a lawyer. I would have lost all of my securities licenses. I would have lost my CFA, my Chartered Financial Analyst degree, which took 3 years, and it's probably one of the toughest degrees out there to get. I mean, the New York bar pass rates pale compared to the CFA pass rates. Yeah. And yes, I wouldn't have been able to manage money in a registered capacity. So I probably could have managed money for somebody else or privately, but I would not have been able to do many of the things or jobs I previously would have been able to do. I would have been a convicted felon. And as I would later learn after I got out of prison, that precludes a whole host of not only industries, whether it's, getting a license almost anywhere, whether it's an insurance, a real estate broker license, or any type of, a barbershop license. Frankly, a lot of places, they don't allow you to do that anymore. Or getting, housing, education, you name it. It precludes a lot. So, like you said, it's not a layup. But the real benefit would have been no jail time. And the government was saying, look, you're going to face 3 to 5 years if you get convicted. My lawyers were telling me another story. They were saying, this case is a joke to some degree. The worst you'll get is probably a year, maybe 2 tops. And based on that estimate, based on the fact that I didn't think I did anything wrong and I wasn't about to get up in front of a judge and perjure myself and say that I knew X, Y, and Z when I didn't. Like I said, 9 out of 10 of the ideas this guy gave me, I lost money on, and nobody was, reimbursing me for the money I lost on those trades. So I wasn't prepared to do that. I really, felt like I had to look myself in the mirror and tell my kids and tell myself and say, if I don't think I did anything wrong, why am I going to take a deal just because I fear going to prison or I fear, the money involved or whatnot. Now that's a little bit naive because, again, money plays a big role in everything. And if you don't fear prison, you're kind of a moron because prison's a pretty crappy place, to be frank, and everything else. But at this point, my calculation was I'm willing to risk 2 years in prison and more money to stand up for something I believe in. And if I don't believe I did it, and I don't believe I did anything wrong, I'm not going to stand up in front of a judge and say I did.
All right. What's the?
I turned it down. Yes.
All right. What's the? And we're going over time, which is a good thing, and I'm happy about that actually because I want to give the full story. But give us a short answer as to why you lost.
There was not a winnable case at that time period. Not sitting together with the two brothers, especially one of them with all the informants and all the things that were said. Not with Occupy Wall Street down the street, and not with a judge who, frankly, was either complicit with the government. This was a judge who had been selected for numerous insider trading cases because he gave the government a lower hurdle to jump over. I mean, he admitted an entire element of the crime, knowledge of a benefit in our case, when he charged the jury. So I don't think it was a winnable case. I mean, there really wasn't on 3Com. They didn't present a single piece of information. There was zero direct evidence. It was, hey, this guy traded it, and then Mike traded it and made money. That was the extent of it. And so in that way, I think I would have been convicted no matter what. I mean, I think I would have been convicted after jury selection based on some of the comments. I mean, they asked, how many people have a positive or a negative view of hedge funds or Wall Street, and hands shot up so quickly. I make the joke, you would have thought the judge asked, who wants a free iPad? Wow. The environment, it was an unwinnable environment, in my opinion. And, I don't think the case would have been brought in 2005. I don't think the case would be brought now. I don't think there's a single, commentator that would look at this case and say, this case should not have been vacated after the fact, especially when the wrong jury instructions were used. But, life's not always fair. And my attorneys didn't catch on direct appeal the same issue that some of these other attorneys in cases had. And so the case stands as of now. But like you said, Tom, it's more a function of, in my opinion, it was guilt by association. And my ex-wife actually ran into one of the jurors about a day or two after the case ended in our local grocery store and asked him point blank, why did you convict Mike Kimelman? And he said, well, hem, haw, and, there were just a lot of really bad tapes on that guy's V. And, my wife was kind enough to say, I understand that, but I'm not asking about Zvi. I'm asking about Mike. Why did you convict him? And it was, and he really couldn't come up with a concrete answer other than why would he be in business with a guy like that? And that's, under the law, that's not enough to convict someone. It's not even enough to charge someone. So
wow. So all right, because I don't want to talk too much more because I want to leave some to the imagination, and I want people to get the book. I'll leave a link, and I'll even put an interview up or two that you did. All right. So obviously when you were incarcerated, how long were you incarcerated for?
21 months. I ended up doing 15 months. I got sentenced to 30 months. And this is sort of a fun little fact. I got sentenced to 30 months, and I eventually paid disgorgement on the case, meaning I had to give up all the money I made because of the trade. I settled that for $30,000. So, a firm that I had sold a piece of the firm, my share, was worth approximately, $40 million. I ended up settling the trade for $30,000, and I got 30 months in prison, which is a nice contrast to the big banks who paid $400 billion, that's billion with a B, wow, in fines, and virtually not a single person went to prison. So, if you can't see the political angle there, or the fact that this was somewhat of a whitewash, congratulations, I've got a bridge or two I'd like to sell you as well.
All right.
But yeah, the book goes into that more at length, as well as, finance and law and everything else. But so I ended up doing 15 months on the 30-month sentence at Lewisburg in Pennsylvania, and then I did 6 months in a Bronx halfway house.
Wow! All right, and then just to conclude, what's obviously you got your book, which we'll leave a link. What are you doing now? Well, are you building a franchise around this? Are you doing more of consulting. What are you doing now to feed your family?
A little bit of everything. The book has kept me busy. I've been doing some speaking with regard to that on, overcoming adversity and some motivational speaking. In conjunction with that, I'm doing some high-end executive coaching for performance and growth that has been actually really exciting. And I've been working with some great clients, and that business is building. I'm also doing some consulting, direct consulting for compliance with different hedge funds. There's a huge gap, in my opinion, between the way the law is written and the way the law is implemented. And there are a lot of people in compliance and elsewhere who either understand, from a legal perspective, the law, but have never seen it implemented in real life and how it is by regulators or feds. Or don't have the trading desk experience. So there's very few people that have all three of those angles, former lawyer, massive trading desk experience, as well as, went through the criminal justice system and the prison system, unfortunately. So I understand intricately how those laws are put into play and implemented. So that has been keeping me busy. And then, I've always been an entrepreneur and always been interested in starting businesses. Been doing some real estate investment, mostly in the Southeast. I'm active now with a couple of companies that I've been consulting for in Colorado on the cannabis front. I think that's an incredible industry that's going to bring a lot of, health benefits and therapeutic benefits to people over the next generation. And have, been consulting on the blockchain front as well. But busy all across the board, and always looking for new and exciting opportunities or investments. So, I'm excited about the second half. Again, don't think I should have gone to prison. Don't wish it on my worst enemy. But at the same time, sometimes our experiences are what make us who we are. And having gone through that and the experience, I got to see, what the criminal justice system was like, got to meet some incredible people, got to time to prioritize my life and really think about what matters and what doesn't matter, which many people aren't, privileged enough or gifted enough to have the time to do that. So it's given me a different perspective and a different outlook. And I've been active now in criminal justice reform and prison reform and elsewhere. And I'm excited about, continuing to try to make a positive impact in those areas and with people.
Got it. Well, listen, this has been Mike Kimelman. Confessions of a Wall Street Insider, a cautionary tale of rats, feds, and bankers. And Mike, it's always a pleasure. We'll post this up, put a link to your website, and then you always have free open forum to contribute to New Theory in any form, whether you want to send an audio, video, written, etc. Because I think you should get your message out there because it needs to be heard. So, Mike, thanks for being on the show.
Would love to, and I think it's a great platform, Tom. Thanks for having me, and look forward to working with you in the future.
Awesome, brother.